Yo, evening guys. I just watched your video, Lorenzo, for your weekly analysis. Yeah, fantastic. Thank you for sharing that. I just wanted to share a little bit about the Japanese yen actually that I've been looking at in the background. I'll try my best to explain some of the bits and pieces on my mind coming towards the end of the year and what I think could happen um, with the yen or what could happen for sort of trading opportunities. So and stuff I'm just trying to look at and perfect and maybe it can help, build some extra confluences into our thinking as well. So let's start with the yen itself and on the weekly time frame, and this is the yen futures. And I just want to explain a little bit about how I've been setting up the indicators. And Lorenzo, you can sort of steer me if you think this is a good, not so good, or we kind of know this anyway, and it's not really nothing new. So, but you know what? This is why I like to look at it like this. So, one of the things that I like to always look at is history because I'm new to trading, as you know, and I'm trying to use all different tools to figure out different ways of utilizing the indicators and finding out what my biases are. So I won't get too complex because obviously I tried to cover a lot of angles with my videos and I don't want to confuse everyone with how I like to think. But what I've done here, this is the open interest at the bottom here. Okay, this is just represents the extremes of open interest. This is the smart money indicator. Same thing, commercials, non-commercials, and open interest in the background. And this is retailers via the smart money commercials. And the reason I like to plot this out separately is because I like to see these divergences, if you want to call it a divergence, between the retailers and the non-commercials. And this represents the extremes at different levels. So you can see the raw extremes compared to the smart money index. So, and I'll just give an example of that. As you can see at present, you can see here, smart money is really bearish. This represents it here. And then retail are in bullish extremes. Okay. And why I like to separate them is because this shows you the extremes between 80 and 20, but when you have it singled out like this and then you add them together, you can really see the differences between them both. And I think it just gives an extra view on the EMA as well. So I'm using the EMA 100 here. So what we can see here is this bullish uptrend breaking out from this bearish downtrend. And you can see here again this bullish uptrend, and when we top out here, we break down into this bearish downtrend, which we've been in for around 2 years. So what I like to look at is just these divergences and the differences between retailers and smart money and the open interest. Okay, so you can see immediately here, this is when we broke the 100 EMA here. This was the lowest part of the bearish downtrend previously. And why I'm interested here, because every time we see this bottoming out process, we see the same on retailers, we see the same on open interest here, same on large specs, and then we see this divergence between commercials and retailers. And you can see this is a significant change between them both. So we see this bottom here. Okay, quite simple. We know about that, and we know about the bottoming out process. So why do I utilize it like this? Because I think it's really clean for me to see when do we shift and create this bullish uptrend. Well, what's really important here is that open interest is in extremes. You can see commercials are now at extremes, bearish extremes, and retailers are now coming up to create these bullish extremes. And once we get to this week here, which is around the 28th of March, is when we break out. And you can see the interest then is at bearish extreme. So there is the open interest is not there. The contracts have been shifted and we've created this push to the upside. Really, really important. And this chart here really represents that quite nicely. You can see this big gap. You can see this change in sentiment. We've gone from bearish to bullish. When did we break back down? So you can see here, you see the same thing to be true. We see the open interest rise up here. We create this bottom here again. We breakthrough. We've gone back into a bearish downtrend. You can see the same thing is true for retailers. We're now in a bearish downtrend. And you see the commercials have practically created this bottom. But we are in extremes. But we're not in all-time extremes regarding smart money here. But again, you can see it's created the bottom, but nothing too significant. And why is that important? Why do I like to observe that? Well, just for my understanding. And again, you could look at the databases and the smart money tools to look at the laddering. But you can see here, practically, yes, we are in this more of a range, more of a channel here. And it's not the biggest of range. And you can see that to be true. But when we want to see a significant change, and where we started this larger shift to the downside, this larger downward trend, you see this massive divergence between retailers, smart money, and this significant period here before we see this bearish downtrend of open interest. Okay, and this is what I like to look for, these significant changes. Okay, and we see this to be true every time. You can even see here this top and out process here where all the liquidity is being removed here. You can see this open interest is in bullish extremes. You can also see this divergence here occurring here. Retailers are bearish. Smart money is almost all-time bears, creating this top. Really important to remember. So each time we see these extremes, you see these extremes represented against retail and smart money commercials. So something that I always look at. And since then, we've been in this bearish extreme, and we've not been able to break out of the 100 EMA bearish trend since. So we've practically been bearish on retail. Smart money has been in the extremes, but not at all-time extremes. But what we have seen as of late is that we did see this here. Commercials are at bullish extremes, setting in this bottom here. Retailers were all caught out, all their positions taken out here. You can see where we've been in this trend for practically 3 years. Yeah, we're coming up to 3 years. All the positions were taken out. Smart money's then decided, okay, this is where our extremes, and they've just rolled over, and they're now at full bear extremes. Obviously, we've been coming back up, but we've seen this massive divergence between the two, and we've seen this shift of where we tried to break out and break this 100 EMA line, which we almost did, but we weren't able to, and we broke back down again. Okay, and what we've seen is smart money come back up. Retailers are still bearish, but you can see now we're seeing this more pinch. And every time we see these tops or bottoms, we see the open interest on the end doing the same thing here. Okay, and then you see this massive drop when there's been a complete change in direction. So yeah, not a lot of things we don't know there, but it's just the way I like to set up my charts and have a look of what could be happening in the market. And I do find with the yen is actually quite interesting. So if we move on to my next chart here, one of the things that the yen is well known for, and what I like to look at, is the US bonds. Because when you consider the yen, you have to consider what's happening with the US bonds. Okay, and if you look at the bonds and if you look at the yen, you can see practically it just does the opposite to each other. So they're both on the weekly time frame here, yeah. And you can see here with the bonds, it's been in a bullish uptrend on the 100 EMA from the 20th of September 21. Okay, and if you look at the yen, if you go to the 20th of September 21, you can see we've been in a bearish downtrend since then as well, because it follows what the US Treasury bonds does. Okay, and I will go into that a little bit here, but you can see here this bottom here, this top here. Yeah, you see this top here again. Obviously we didn't break the trend, but you see this top here. Yep. And you see something similar here, this bottom here, before we continue back up, and then we see this downward trend. We see this top here, we see this bottom here, and you can see again we break back down, we come to the upside, and we go back into a bullish uptrend. And this is really important when you consider the yen against the US bonds. Now I know we all know that, but this is something also just for planning and preparation. So when you see on the US government bonds, when you do see the bonds coming back down, what you can assume, is that what could be happening. Take it to the daily time frame here. When you start to see this coming down, and you start to see us breaking structure and coming back down, you would expect the yen to start coming back up, or the opposite. When you see the bonds coming up and bouncing off the CMA line like this, we're coming back up and not being able to break that trend. What I'd expect to see is for the yen to keep coming down. Okay, and the opposite. So as I said before, really important stuff. So I like to look at that. Also, what's really interesting with the yen, so if we go to the yen here and we compare it against the valuation on the daily time frame here, it's always important to use the yen against these different pairs. Okay. Oh, this is the wrong one. Let me go to futures and get the Japanese yen. There we go. So I like to compare the yen against um, three different forex pairs. So I like to use the dollar, I like to use the US bonds 10, and I like to use gold. And the reason why is because the yen is actually a safe haven as well. So I've been doing a lot of research. The yen is used as a safe haven commodity, safe haven currency, and it is considered this as well. Now, obviously, you can research that on AI and stuff, and it will tell you the details of that. But often, what we see with the valuations that when gold comes down in against the yen, you can see here, for example, the yen has come down in price, and actually you can see the yen is undervalued against gold, and you can see the same. The yen is now somewhere in the middle here. It's not overvalued or undervalued against the dollar. Somewhere in the middle, and the same is true against the bonds. So what I'd be looking for is obviously if we were overvalued against the dollar, you start to see a push to the upside, and you see the same with gold, and you see the same with the bonds. When the bonds are undervalued against the yen, you can see here, when it's undervalued, you see this top, and then you see us come back down. And every time we go overvalued, we come back down. Overvalued, we come back down. You can see each time. Again, undervalued, we come back down. So this is something to observe as well. And I like to use those three pairs particular against the yen. So why is that important? Well, a rise in the US Treasury yields generally weakens the yen, and as the dollar strengthens. So that's why I like to use both. I like to use the yen, and I like to compare that against the US Treasury yields. And you have to try to do it at the same time, unfortunately, and it is quite tricky. But that's something to really measure and have in your thought process. And conversely, again, um, and really important, when a fall in yields happens, you often will see the Japanese yen strengthen significantly. So if you look at, I believe it was 2008, if we go to the yen, what you can see here, if you go to 2008, is when we had the US had the money crisis here, and I've been doing some research on this as well. This is when you see the strengthening of the yen due to the crisis in America. Okay, because the yen is seen as a safe haven, and also when yields are low. So if we go to the yields in 2008, back here, you will see the same thing from 2008. So go to the weekly time frame. So it's easier. Go to 2008. You can see the same thing happened. Let's get the actual bonds up. I think that would help. Here, go to the bonds. Where are they? Find the bonds here. Start youth 10 bonds. And you go to 2008. What you can see here in 2008, when we had the crisis here, was this downward trend, and you see the yen strengthening when the bonds were weak in the US economy. Okay, so something I've been researching and something I like to look at, really important when you consider the yen, or just an extra confluence when you look at the yen. Okay, um, and I know that might seem like a lot of details, and you might wonder why it's important when you're considering trading, but I think it's really important for your knowledge to know more about how the yen moves. So I think what's really important as well for the yen, and I can dive into it quickly if you want to have a look, if you want to see the yen pairs in particular, and the most common pairs that are traded is the US dollar JPY and the Euro JPY. And this is where you can really see what's going on with the yen. So if I was to look at the yen here, you can actually see against the US dollar, the yen's now at monthly resistance, and I do think that we could be looking here setting up quite well with the actual yields to see a rollover and for us to come back down. I won't go into too much detail because it's quite a long video, but again, I think really interesting moves today by the American dollar, and it wasn't able to break out of this resistance. And then if you look at the euro, so if I go to the euro against the yen, again we see the same thing on the euro. We've got to the monthly resistance here, and we've been there for the full week actually so far, and we've been trying to break out and we can't. Looking like we found this monthly resistance, and it's quite hard to break, and it could be looking like we could roll back over here as well. So really, really important as well. And often you can compare the USD and the Euro yen together. Okay, so really, really good stuff there. And I hope that helps a little bit. So what would I be looking for? Well, I think overall I'm going to be looking for the yen to come a bit further down. Maybe it's there now, and I'll be looking to short the yen back down to the Sunday Open, or potentially even further, and see how we go. Because I do feel like the yen has weakened a little bit, but I do believe the yen will start to come back up, considering the rate cuts that are coming, because there will not be any rate increases on the yen. There certainly won't be any rate decreases on the yen. So, yeah, I'm looking at the yen for some future scope as well. I hope that helps a little bit, guys. Long video. Any questions, let me know. If you want me to go into any more of my charts, let me know, and I will do. Yeah, and I will see you very, very soon. Thank you.